Okay, now let's apply everything that you have learned. And the examples that I give you during the course, I didn't put in all the indicators because otherwise it's going to confuse you. So right now I put in everything that we need except for 5 EMA because we are not really looking for any breakout trades. Okay, we are looking for retracement trades. So the only indicator that I remove is 5 EMA. So I put these 3 oscillators here, not to encourage you to use all, but just so that it's easy to show you if you use either one of these indicators. Okay, make sure you just pick one of these, at most 2, but I feel that if you use 2 it's going to confuse you. Okay, and you can apply this system to higher time frames. You can use it on hourly, H4, D1, weekly, monthly, but I don't really use these time frames, so let's just ignore that for now. Alright, okay, let's find a good bearish trend to get into and give you some examples. So you can see here's a nice trend over here, and let's see if we can draw a trend line. Okay, and let's wait for price retrace to a resistance, and you can see one over here. Potentially you can enter, and we can put a vertical line here and check the higher time frame H4 to see whether at this point is it a sell trade. So good to go overall in H4. 50 below 100, 100 below 200, so you go back to H1 and then you can potentially enter into this trade. And then you can check RSI, CCI and stochastic to see whether did it give you any overbought signals. RSI did not give you any signals. CCI went to overbought and then go back to transition level, which is around over here. Okay, stochastics as well went to overbought and then go back to transition level. So you can see that RSI, as usual, it doesn't give you that many signals. But then even though CCI and stochastics gave you overbought, but I wouldn't really get in because price action is not really resting at any resistance level, any obvious resistance. It almost approaches 50, but it is not there yet. So I'll wait for it to go up to 50 SMA here. But the downside when you enter over here, which is still okay, is that your RSI, CCI and stochastics didn't really give you an extreme overbought signal. So can you still go in? Yes, you can, but it wouldn't be a super high probability trade. Okay, so you can put your stop slightly above 50 SMA and then you can TP. You can TP when it goes to the recent swing low, which is somewhere right here. So in this trade you're getting about 265 points and then you're risking about 100 points, which is a good risk to reward ratio, a trade worth going into. Okay, so let's see if we can find any more higher probability trades. Okay, you can see one more downtrend over here. Let's see if we can draw a trend line. Okay, it fits like that. And let's zoom in and see whether there's any price action confirmation. Okay, see a little bit of evening star over here, or if you look at 2 candlestick pattern, it's a bearish army. So if you are more aggressive, you can enter after the bearish army is formed, but if you're more conservative, you can wait until the third candle. Let me zoom in. You can wait until the third candle is formed, which is a confirmation that there's an evening star. Okay, but like I said, if you enter in a more conservative way, your risk to reward wouldn't be that good. Okay, so your entry point could potentially be here. But first thing first, check at this point onwards, is it in a downtrend in H4? Okay, so in H4, it is right at this point. 50 is below 200, but 100 is still a little bit above 200. So I'll say the probability is reduced, slightly reduced because of this, but it is still okay because 100 SMA is still sloping downwards. Because it's a lagging indicator, so it takes some time for it to come down. But is it still okay to sell? Yes, I would say it's still okay. No trade is perfect, right? No trade is perfect. So also make sure that you check that you're not trading into a high impact event. Okay, so is it still okay to enter this trade? Let's see whether the risk to reward ratio is good. So if you are to put your stop loss, you'll potentially put it here, and then your recent swing low would be over here. So let's check the risk to reward ratio. You're taking 118 points, risking 173 points. So I would say this trade, I wouldn't prefer to go in because risk to reward is not that good. Then some more, RSI is not really giving you any overbought signal. CCI didn't really give you any signal yet. Stochastics as well. So if you look at this trade, even though yes, it might potentially go down, but this trade is just not worth it. Okay, unless you're taking a trend following approach, you apply fundamental analysis and then you ride the whole entire trend, then it's still okay to get in and then ride the whole entire trend. But if you are looking at a short-term trade basis, then this trade is not worth it. Okay, so trend following using fundamentals, I'll cover this in maybe in the future courses where you learn how to apply 80% fundamental analysis and also incorporate technicals into that. So that's more of a trend following approach, and a lot of hedge fund managers actually use that kind of approach. Okay, they evaluate fundamentals and then use that data to ride the trend. Let's see if we can find a trade at a bullish trend. Okay, let's see over here. You have a nice uptrend over here, and let's see if we can draw a good trend line. Alright, let's find a good point to enter where there's a confluence of the price action. So price tested second time here, and if you adjust this trend line a little bit upwards, it can potentially test a third time here. So is this a good place to enter? Now it didn't really test 200 SMA, so we need to cut some points from that. And if you're waiting for it to test 200 SMA, it probably wouldn't test anyway, so you probably need to wait for a while, and then later on price came down and test 100 SMA and also 50 SMA, and also tested your trend line at the same time. So let's see if this is a potentially good trade. So you can put your vertical line here to check in H4, is it an uptrend? Okay, so in H4, you're at this point. The moving averages, it is a little bit, okay, I would say complicated because 200 SMA is sloping sideways. 100 is sloping slightly upwards. 50 is above 100, so it's still okay to make a buy trade. Just that it's not super perfect. Okay, momentum indicators oversold, RSI, CCI oversold, stochastics oversold. So whichever indicator you use is going to give you oversold signals. And you see that there's a bullish engulfing pattern. Okay, so you got a bullish signal, then you can put your stop slightly below 200 SMA, just like that. Again, make sure that you're not trading into a high impact event, and you can put your TP at the most recent few swing highs. If you put it right here, it will be too tight, so at most you can put it right here. Okay, so let's check the risk to reward ratio. So you're risking 193 to take 219. So is this trade okay to get in? Oh, stay still okay. Okay, because what you don't want is your stop to be wider than your TP target, which is not so good. Right, and somehow there's a confluence if you enter this trade, and your momentum indicators is giving you a signal to get in. So overall, based on all these factors, it is still okay to go in. Remember when I said that every single day the price has to touch 20 SMA. I didn't cover in detail into 20 SMA because in the beginner's course I've already covered it. Okay, basically 20 SMA, every day the price has to touch it. You see, over here the price went up and then it has to come back down and touch 20 SMA. So if you have a buy trade over here, okay, and this is the start of the day, this is the period separator, this is the start of the day, and if I have a buy trade over here, I wouldn't enter because I know that because at this point in time it hasn't touched 20 SMA for the day. So if it has to touch, it will have to come down, and if my stop loss is somewhere over here, then I will get stopped out. Understand what I'm saying? But if my stop loss is somewhere below here, 20 SMA is over here, I know that this is not my concern, because even the price retrace to touch 20 SMA for the day, it might bounce off from any of these moving averages, 50 SMA, 100 and 200. My stop loss is all the way down here, so it doesn't really concern me. So in overall, based on all these factors, this trade is okay to get into. Now if you enter using H4, then you need to check D1 for the higher time frame, okay, for the bigger picture trend. So let's see if you can enter using H4, okay, 50 above 100, 100 above 200 right at this point, and price actually retraced to this 200 SMA. Let's see if we can enter. Alright, so is there a confluence when it comes to the price testing critical levels? Okay, let's see. We can see a little bit of a support over there. Let's draw it in terms of a support zone, just like that. Draw it properly like that. Okay, so price came down and test 200 SMA, and also at the same time it tests your support zone. So there's a confluence indeed. Right, so potentially we can enter right here. So let's put a vertical line here. You go up to a daily time frame to check the bigger picture. We are at 20th of December. So would this be a high probability trade? Okay, so if you go to the daily time frame, you realize that at 20th December, it is still below the trend. It is telling you that this is a sell market. So based on this factor, even though H4 it is telling you to buy, okay, would you enter? I would say no, because both time frames are giving you conflicting signals. Even though yes, this trade worked out, it went up, but then this is not a high probability trade, so I wouldn't enter just because H4 alone is telling me to buy. Understand what I'm saying? There are always better trades to get into next time. Alright, let's see if we can enter right at this point. You have a nice downtrend in H4. Let's see if we can draw a nice trend line to fit the price action. Okay. Alright. And the price tested the third time somewhere right here. So let's see if there's any price action confirmation that will allow us to get in. And you see price retrace up here, tested 200 SMA, tested the trend line for the third time. And when it tested the confluence area, RSI gave you overbought, CCI gave you overbought, stochastics gave you overbought. So we put a vertical line here, check higher time frame, which is right at this point. We are right at this point. Is this a sell market? Definitely. So we will look for price action confirmation to enter. 50 is below 100, 100 is below 200, so it's good to go. There's a little bit of crossover here. This is a false crossover. And it's not really a concern because 100 SMA is still sloping down. And you can wait for price action confirmation. Like I said, it doesn't have to be perfect. Okay, so I see a little bit of bearish signal over here. Okay, a green candle followed by a large red candle. It's not a perfect bearish engulfing pattern because the green candle closed below the halfway point of this bearish engulfing. So we minus a little bit of points from there, but based on the factors that we see, the trend is still in our favor. There's a confluence. Momentum indicator went from overbought back to transition zone. And let's see if there's any more resistance points. There's a resistance point over here, but this price area did not test it, so it's still okay. If you are to enter right after this bearish engulfing, okay, it hasn't touched 20 SMA. It's still okay because if it has to touch, it would come down. Okay, unless if 20 SMA is above over here, above my stop loss, then I need to be careful. Okay, because if I'm making a sell trade, I'll put my stop up here. But now 20 SMA is below my entry point, so this increases the probability that price is gonna go down. So you can put a TP target at a recent swing low, which is over here. And you don't want to put it right at the point, at the low point. You want to put it slightly above, okay? Give it some buffer. Let's put it at the body close over here, okay? And you can put your stop slightly above the 200 SMA or the bearish engulfing pattern, right? So in this trade, you are risking 500 plus points and you're taking about 1,500 points. So realize that the higher time frame you go, the higher amount of points that you'll be risking, but potentially the higher amount of points that you'll be harvesting as well. And you will hold your trade for more than 1 day, because if you trade higher time frames, chances are you need to hold your trades for more than 1 day. Okay, so let's see if this trade worked out. Boom, done. So your trade took about 1, 2, 3. So if you trade higher time frames, you need a lot of patience. Try not to monitor it too much, because the more you monitor it, the more it's gonna give you a lot of stress. Okay, now the thing is, I can give you as many examples as possible, but I don't want to spoon feed you, because the more I spoon feed you, the lazier you become and you wouldn't do any work. The key to executing all these trades with confidence and pulling it off successfully is to make sure you backtest and then practice this on demo. Backtest all the way up to many years before, and then just practice all of these setups day by day, one by one. You gotta put in the hard work. Otherwise, if you're not willing to put in the hard work, nobody's gonna help you. Alright, so with that, I hope that these examples can give you a clear idea on how to apply onto your platform. If you want a broker recommendation, you can email my team, and then we'll give you the details and a link. Okay, so with that, I'll talk to you in the next lesson. Bye.